Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of the Streamlined Voluntary Disclosure Program. Lots of times clients will reach out and they'll say that they want to do voluntary disclosure, and they won't realize that the Streamlined program and voluntary disclosure are not technically the same thing, even though some practitioners refer to it as Streamlined Voluntary Disclosure. Anyway, let's kind of go through how it was created, what you got to do to get in, and what the concerns may be. So, the Streamlined Filing Compliance Procedures, the standalone was created in 2014. It used to be part of the bigger traditional OVDP, where there was a streamlined aspect to it, not a standalone program. The IRS did away with OVDP in September 2018. In order to qualify for the Streamlined disclosure procedures, or we'll just refer to it as Streamlined Voluntary Disclosure for this, okay? You have to show that you're non-willful, no matter what. So there's a couple of different programs. There's the Streamlined Foreign, which is for non-U.S. residents, Streamlined Domestic for U.S. residents. They each have different requirements, but at the end of the day, in order to qualify, you have to be non-willful. If you qualify for the foreign program, there's a penalty waiver, so there's no penalty. All you'll have to pay is interest on any taxes that are due, but you can also apply the foreign earned income exclusion, foreign tax credit, etc., etc. If you don't qualify as a foreign resident, you end up doing what's called the Streamlined Domestic Offshore Procedures, and you pay a 5% penalty on the highest year-end balance in the 6-year compliance period. We have gobbles of information on the website you could use as reference. It is important to note that it is a temporary program. The program won't be around forever. In 2018, as I mentioned earlier, the IRS did away with OVDP. They expanded the traditional voluntary disclosure program, but OVDP is done. OVDP had more parameters to the program. It was more set penalty. You generally never got audited unless you opted out and tried to proactively reduce the penalty. They also got rid of delinquency procedures. So there's something called Delinquent International Information Return Submission Procedures, mouthful. They did away with that program in November 2020. Not as many people qualify for that program because you had to essentially not have any unreported income, resulting in substantive changes to your tax return, but they did do away with that program. So if you're going to do the Streamlined Voluntary Disclosure, a few quick tips. Don't overwrite the certification. When people come to us after it's been rejected, it's because either the taxpayer or some attorney who says they specialize but really has no idea what they're doing wrote a 10-page dissertation. The IRS doesn't want to read that, and chances are somewhere within that 10-page you're going to accidentally hit a tripwire. You might sound willful, things of that nature. So it's better in this particular situation to underwrite than to overwrite. They'll always come back and say, hey, give us more information. Rarely ever. It's never happened to us, and we've submitted more than 1,000 streamlined applications. Not all assets and accounts are going to be subject to penalty. So the two main ones to keep in your mind is Canadian RRSPs and RRIFs are not going to be part of the penalty computation. Neither is individually owned real estate, even if it's being used for rental property. There's different strategies on which 3 years of tax returns you want to submit. You don't want to get cute about it, so it's important to kind of go through the facts with your counsel. Make sure that they have all the facts so that they can give you the best advice for strategy. If you're out of compliance for prior years, as we mentioned, there is Streamlined. If you're willful, you're going to have to go the traditional voluntary disclosure route. Now it's referred to as a VDP, if you want to do it. And there's always reasonable cause and delinquent FBAR. So as of now. So if the only issue you have is unreported FBARs, you don't have any of those other forms, 3520, 3520A, etc., all you have is the FBAR. You have no unreported income. That income was already included in your tax return. If you were required to file one in that year, then you may still qualify for delinquent FBAR submission procedures and avoid all penalties. We have lots of information, as I mentioned, on our website, goldinglawyers.com. My name is Sean Golding. Thank you for your time. Enjoy the rest of your day.